The deal between Newmont and Newcrest is a historic milestone for the gold mining industry. It is the largest ever merger and acquisition (M&A) deal in the sector, surpassing the previous record of $10 billion set by Barrick Gold's takeover of Randgold Resources in 2018. The deal values Newcrest at $17.5 billion, which is a 46% premium to its share price on February 3, 2023, before Newmont's interest was revealed. Newmont is offering 0.400 of its own shares for each Newcrest share, and has allowed Newcrest to pay a special dividend of up to $1.10 a share to its shareholders. The deal will create the world's largest gold producer, with combined annual output of over 7 million ounces and a diversified portfolio of assets across Australia, North America, South America, and Africa. The deal will also enhance Newmont's exposure to copper, a metal that is expected to benefit from the global transition to clean energy and electric vehicles. Newcrest owns a 70% stake in the Cadia mine in New South Wales, Australia, which is one of the world's largest and lowest-cost gold and copper mines. Newmont said it expects to generate significant synergies and cost savings from the deal, as well as improve its environmental, social, and governance (ESG) performance. The deal has been unanimously approved by the boards of both companies and is expected to close in the third quarter of 2023, subject to regulatory approvals and shareholder votes. The deal between Newmont and Newcrest is not only the biggest gold mining deal ever, but also one of the most generous. Newmont is offering 0.400 of its own shares for each Newcrest share, which means that Newcrest shareholders will own about 16% of the combined company. This is a premium of 17% over the closing price of Newcrest shares on Friday. But that's not all. Newmont has also allowed Newcrest to pay a special dividend of up to $1.10 a share, which will be funded by the sale of some of its assets. This dividend will add another 6% to the value of the offer, making it a total of 23% higher than the market price. This is a huge win for Newcrest shareholders, who will benefit from the increased scale, diversification, and growth potential of the merged entity. The deal between Newmont and Newcrest is not only the biggest gold mining deal ever, but also a strategic move to create a global powerhouse in the industry. The combined company will have the largest gold output in the world, with over 7 million ounces of gold produced annually. That's more than twice the amount of its closest rival, Barrick Gold. But gold is not the only metal that the new entity will have in its portfolio. It will also have a diversified exposure to copper, silver, lithium, and other minerals that are in high demand for the green energy transition and the electrification of the global economy. The deal will give Newmont access to Newcrest's world-class assets in Australia, Papua New Guinea, Indonesia, and Canada, while Newcrest will benefit from Newmont's strong presence in North and South America and Africa. The deal is expected to generate significant synergies and cost savings for both companies, as well as enhance their environmental, social, and governance (ESG) performance. The new company will have a robust balance sheet, a disciplined capital allocation strategy, and a commitment to deliver superior returns to shareholders. The deal will also create opportunities for local communities and stakeholders, as the new company will invest in sustainable development and responsible mining practices.